Learning Outcome LO1. Understand microeconomic factors affecting organizations. In today's video, we'll explore the key microeconomic factors that influence organizations. You'll discover how elements like consumer behavior, supply and demand, competition, and pricing strategies shape business decisions and strategies. By the end, you'll understand how these factors directly impact the way organizations operate and succeed in today's dynamic market. Supply and demand are fundamental concepts in microeconomics. They determine the price and quantity of goods in a market. Organizations must understand these dynamics to optimize production. A shift in demand can lead to changes in pricing strategies. Similarly, supply variations can impact availability and cost. Market structures define the competitive environment of a business. From perfect competition to monopoly, each structure has unique characteristics. Organizations need to adapt their strategies accordingly. Understanding market structure helps in identifying competitive advantages. It also influences pricing and output decisions. Consumer behavior is crucial for businesses to understand. It involves studying how individuals make purchasing decisions. Factors like preferences, income, and trends play a role. Businesses use this information to tailor their products and services. Effective marketing strategies are built on consumer insights. Elasticity measures how demand or supply responds to changes in price. Price elasticity of demand is a key concept here. It helps businesses predict consumer reactions to price changes. High elasticity indicates significant demand changes with price shifts. Understanding elasticity aids in pricing and inventory decisions. Understanding production costs is vital for profitability. Fixed and variable costs affect pricing and output levels. Businesses aim to minimize costs while maintaining quality. Economies of scale can reduce average costs as production increases. Efficient cost management enhances competitive positioning. Government regulations impact business operations significantly. They can dictate market entry, pricing, and product standards. Compliance with regulations is crucial to avoid penalties. Regulations may also create opportunities for innovation. Businesses must stay informed about regulatory changes. Technology is a major driver of change in business. It affects production processes, communication, and customer interaction. Organizations must adapt to technological advancements. Technology can create competitive advantages and efficiencies. Staying updated with tech trends is essential for business success. Globalization expands business opportunities beyond borders. It introduces new markets and competitive pressures. Businesses must navigate cultural and economic differences. Globalization can lead to increased competition and innovation. Understanding global trends is key to strategic planning. Resource availability affects production and costs. Scarcity of resources can lead to increased expenses. Businesses need efficient resource management strategies. Sustainable practices can mitigate resource-related risks. Understanding resource dynamics is crucial for long-term planning. The labor market influences wage levels and employment rates. Skilled labor availability affects business operations. Organizations must attract and retain talent effectively. Labor market trends impact recruitment and training strategies. Understanding these dynamics is vital for workforce planning. Inflation affects purchasing power and cost structures. Businesses must adjust pricing strategies accordingly. High inflation can erode profit margins. Monitoring inflation trends is essential for financial planning. Organizations need strategies to mitigate inflation risks. Interest rates influence borrowing costs and investment decisions. Low rates can encourage business expansion. High rates may deter investments and increase costs. Understanding interest rate trends aids in financial forecasting. Businesses must plan for interest rate fluctuations. Exchange rates affect international trade and competitiveness. Fluctuations can impact import and export costs. Businesses must manage currency risks effectively. Exchange rate trends influence pricing and market entry strategies. Understanding these dynamics is crucial for global operations. Competition shapes market dynamics and business strategies. Organizations must differentiate to gain a competitive edge. Analyzing competitors helps in identifying market opportunities. Competitive pressures can drive innovation and efficiency. Understanding the competitive landscape is essential for success. Barriers to market entry affect new business ventures. High barriers can deter potential competitors. Understanding these barriers aids in strategic planning. Businesses must identify ways to overcome entry challenges. Effective strategies can turn barriers into opportunities. Consumer confidence impacts spending and investment. High confidence can boost sales and economic growth. Businesses must monitor confidence trends for planning. Strategies to enhance consumer trust are crucial. Understanding consumer sentiment aids in market positioning. The cost of capital affects investment and growth decisions. Businesses seek to minimize capital costs for profitability. Understanding different financing options is crucial. Interest rates and market conditions influence capital costs. Effective capital management enhances financial stability. Economic indicators provide insights into market conditions. Businesses use these indicators for strategic planning. GDP, employment rates, and inflation are key metrics. Understanding these indicators aids in forecasting and decision-making. Staying informed on economic trends is vital for success. Risk management is essential for business resilience. Identifying potential risks helps in developing mitigation strategies. Economic, operational, and financial risks must be addressed. Effective risk management enhances decision-making and stability. Businesses must continuously assess and adapt to changing risks. In conclusion, we have learned that by carefully analyzing these factors, businesses are better equipped to make informed and strategic decisions. Should you have any questions, please contact us on 0748-436-1688. Our team is always happy to help. Thank you for your attention. See you next time.